Good morning, everybody, and welcome to the Prosperity Through Multifamily Real Estate Investing Podcast. As always, I'm your host, Real Estate Cody, and joining me in the cockpit today, Brian. I'm going with Coffee Bean Brian. What about that?
Man, I don't know about that one. Let me marinate on that. I'll get back to you. But nice to see you this morning, Cody.
You too, buddy. I'm working on it, man. We'll come up with something creative. We'll come up with it. Brian, tell us who we're working with today.
All right. Today in the hot seat, we have Mr. Jim Monk. Jim Monk is the president of Clozzits. Clozzits has developed a program to increase rents 3 to 5% while improving the net operating income and asset value, all without multifamily owners laying out much capital. His goal is to differentiate beyond the normal amenities and tap into new area of construction development, renovations, and property management. Creating more space for residents is more of an issue than most owners think, and Jim is changing how investors, owners, and managers look at the closet, which can provide an immediate rent increase. Jim, welcome to the show.
Thank you both. Thanks for having me here. I'm gonna call you Coffee. That's okay.
There you go.
Drinking my coffee now.
Coffee.
There we go.
This has been an ongoing debate, Jim, for the past couple of weeks, is trying to get Brian a nickname. We're working on it, man.
There you go.
It's kind of like naming your kid. It's like it's harder than people think if you don't have any kids yet.
There you go.
But I know I do. So absolutely, I understand. And nicknames and things are difficult. You literally have to think about the name of the child and the nickname that goes along with it potentially.
That's right. That's right. It's tough. It's a challenge, but Jim, man, welcome. I'm glad to have you here. Really excited to have you on board. We connected several weeks ago at the MFI conference here in Houston, and was really intrigued by your value add in your business and what you can serve or do to serve us as apartment owners. So really interested to learn more about that. Tell the listeners a little bit more about your background, and we'll take it from there.
So as it relates to the real estate side of it, passive investor. So came out as an executive out of a number of different companies, and like most, looking to plant my capital somewhere. And so started doing that a number of years ago in multifamily. And over time, it's like everyone else, has the conversation about, it's like, look, we've done all the renovations, we've done the hard surfaces, we've done the flooring, we've done about everything we can do. And I kept going back to, what can we do to move the needle? And so I was talking to my friend at the time, Stephen Bolos, who's a gentleman that ran the largest renovations company in multifamily for years, United Renovations, which is now Katerra. It's a $5.5 billion company. And I happened to ask him, because he worked with a bunch of institutional REITs and so forth on the multifamily side. And I said, I'm curious, what are they doing? Where's the smart big money going in doing in renovations to move the needle? And he said, they're about where we're all at, which is they've done everything they can do, especially if you're talking property has been turned over multiple times. It's probably had, different renovations or upgrades done to it. And so for me, I kind of thought about it a little while, and I came back and I actually asked him just a simple question, which led me down to the path of where we're at today in Clozzits, which was, what is the area of the apartment that hasn't been touched? Because if everything's been touched, then there's not much left to do. So kind of went the opposite direction. And so for me, it was about trying to figure out what's the unturned stones that maybe people aren't looking at. And, he came back after a couple of weeks and said, there's one area that hasn't been touched, but there's no money in it. And I said, what's that? He goes, the closets. They're utilitarian. They've been around like this, like the 70s and 60s. MDF typically are wire shelving, and there's no money there. And I said, I come out of manufacturing and so forth. I said, let me take a harder look at that and see if there's a business case to be had there. And so through the business case, we were able to get rent increases and ultimately create the company Clozzits, which is a amenity upgrade that is generating between 3 to 5% rent increases, even post-COVID here, or when COVID started, and really affecting the NOI of the property. And that was one of the things I kept looking at was, how is it affecting the NOI? And what does that mean from the investment to if I'm looking to sell the property or just cash flow it more? So, and we can get into, obviously I want to get into more about where we went, what we did, and some of the interesting reasons why people do Clozzits. It's not just for the NOI, and it's not just for the cash flow like I had anticipated.
Yeah. No, definitely interested in going down that path. But, I just want to go back and highlight, because we've actually jokingly had this very similar discussion, right? Is where everything that comes to market is value add, right? But you go
Yes.
back and look and it's been traded hands like 5 times in the past decade. So it's like, how many more amenities can you really shove into a small little box, right? And
That's
if
right.
you're in this workforce housing space in particular, the 70s, 80s product, the floor prints are smaller. You can't add any space to them, right? So you can deck them out with a couple bells and whistles, but after that, where you're left to add any real value, right? And so I really find this specific niche pretty compelling and pretty interesting, because you're absolutely right. I mean, nobody goes into a walkout property or unit and say, okay, let me go look at the closets, but in particular, and look, as a man, if anybody has wives out there, they know closets are important, right? They need space.
Very important.
So if you have this great space that women can really utilize and whatnot, it becomes very attractive. So yeah, really, really cool. And for those who are maybe watching on the screen, Jim, you got this very nice, beautiful background of some of the closet spaces that I guess you guys kind of model. Is very well laid out. So yeah.
Thank you. Yeah, actually, so it's an actual, I can go up there and touch it right now. So it's not a digital screen. I always tell people that this is our salespeople's office. They literally, we don't let them leave the office. They have to live out of this. So, but actually the joke was with the guy behind me here, you guys would like this. There used to be dresses here and he said, I've got to change it up. People are asking questions. Are those mine? And I said, look, man, whatever it takes to get a sell, just make it happen.
Right.
So,
it's 2021. Who cares? Right.
Exactly right. We lived through COVID. Let's move on, kind of thing. So for us, yeah. So what's interesting about this is you're right. A lot of it is around the female audience, but you do have millennials and boomers, which is the audience that we typically are seeing. The boomers are looking for more storage space, and for the practical side of this, we're usually increasing the closet space between 40 to 52% usable space. So for those who are practical and are looking for more storage because those footprints are small, that's one way to do it. If you're looking at the millennials, they're looking for resort type amenities. They're looking for just differentiation to feel good about the place they're in. And so, again, for your workforce housing, even we have clients today that utilize it as just a differentiator in the marketplace. They want to just have something that's different. And when we started looking at the model here of, how do we make this work? We became very intimately familiar with the numbers, which were, look, we need an amenity that's less than $1,000. We need an ROI that we're going to see out of this that's substantial, above 20%. So our average client sees between a 30 to 37% ROI. We need to have a break-even point within a 2 to 3 year period, if possible. 4 years, with most, but 2 to 3. And what kind of rent increase can it support? And so we really started looking at that. And so let's talk about how we kind of went to market. And that's the one thing that, as a startup, it's very interesting. It's always difficult to get your big clients. Typically, the big guys out there with whatever market you're going into, whatever space you're in. So you start with the smaller ones. We didn't. We really went after the big guys. So, these are maybe names that you're familiar with or not familiar with your audience, but UDR, Night Vest, the Harbor Group. I'm trying to think of something else. Graystar. Multi-billion dollar, I think the smallest client we have today has about 15,000 doors. That's the smallest client we have right now. And so, and that might be a shocker, but the reason being is we wanted to test the market and make sure that it was there. They had the money we knew to be able to do it. And we wanted to get scale. We wanted to grow. So in less than 2 years, actually 18 months, we're in 17 markets already. So it's, so we're growing rapidly. So Phoenix, Oklahoma City, Dallas, Austin, Houston, San Antonio, Orlando, the list goes on. So the point being is what happens is that our clients typically will go in, they'll beta test this product. They'll go into a couple units, see if it's going to work. Then what they do is they go, look, it is working. We are getting the rent increases. And our average client in the country gets a $35 to $40 rent increase. Now, for your workforce housing, I don't mind saying that we've seen the rent increase between $9 to $18 for your workforce housing. But as an average client, a B property set, that $30 to $40 rent increase is definitely doable in different markets. We've seen it in multiple markets. So that's what our clients look at. And so ultimately, and we have calculators around this, guys, that we will literally say, here's what the investment's going to be. From the investment, here's what your rent increases. If you're talking 15, 20, 25, $30 rent increases, here's how it impacts your NOI. And here's how, your ROI stands. And ultimately, depending on what you want that cap rate exit to be, here's what it means if you're exiting the property. And that's a big thing. And for our clients, a lot of them, for the ones that got 200 to 300 unit sets, they may be spending $200,000 to $50,000 with us for the whole complex. They're seeing at a rate, a cap rate between 5 to 5.3, which might be a little bit high right now, but we do see that still for those nicer properties. They're getting usually a return of about 3.4 to 3.5 million on a couple $100,000 investment. So that's why the big companies came in and said, let's just start rolling this out. And that's how we've grown. And now for us, we're now got an infrastructure in place that we can now service the ones with smaller unit sets, the ones with a duplex, or the ones with 40, 50, 60 units, 100 units. We can do that in multiple markets because we already have the volumes there, and we can drive the cost down to make it affordable for everybody.
Jim, you're speaking our language here, right? I mean, all I'm hearing is dollar signs, right? Which is, as operators, that's our goal, right? How do we increase the overall NOI? How do we increase this value and maximize this asset's potential? But I'll tell you, what's interesting is those are some pretty substantial figures when you're talking about 3 to 5% rent increases, 30 to 35, 70, 37% ROI. I mean, those are substantial figures. And then, like you said, on such a small investment, you probably have some people that are listening to this right now and like, what is he trying to sell me? Like this sounds too far-fetched because it's a closet, like it's not flashy, it's not exciting, but it's a closet. So help us scale back a little bit. Help me change the mindset of some of these guys that are like scratching their head, like there's no way possible.
You know what? I when we started this business, I'll tell you, coming into it, like most businesses, we have these grandiose ideas and and the one idea that myself and my management had was the industry is conditioned. The industry is conditioned to say, I have to do my hard surfaces, I have to do my flooring, I have to do the courts, I have to do whatever these things are. You don't really address things behind the door. We all know this. You're putting your stuff up front so people can see that. The reality today is what is going to give you that edge or that needle movement that changes the inventory that you have compared to the guy next door to you or the folks next door to you. In addition to that, it's about what the clients are wanting. And definitely when you look at, and this is one of the things I started looking at, Cody, whenever I started looking at my own property set that I had and properties were being built a couple miles down the road, and they were loaded out with amenities, what do you think happened to my occupancy levels? Started dropping. And when you're talking about inventory, we're looking at about 285,000 units coming on market the next couple of years. I think it's going to slow down after that a little bit. New construction, that's competition. Then you have renovation coming in. That's competition where they're renovating their property sets and so forth. And we all know right now that the acquisition activity is high. So if you're an owner or someone that's managing, property management company, you're just trying to figure out how you can move that needle a couple percentage points. And for most people, they don't think about that. Today, the millennial and the boomer, they have different requirements than what they had 20, 30 years ago. My mom lives in an apartment, she rents, and I can tell you right now, she has a lifetime supply of stuff, and she's trying to put that stuff, cram it in as much as she can. But I've got a younger brother that's in an apartment. He's a millennial, and he'll tell you quickly, he's like, look, I want to feel good where I'm at. He was the first one that brought it to my attention. He's like, Kim Kardashian, them showed their closet. It's amazing. Or HGTV, or these organizing groups out there, that talk about how to organize your life better. So there's a lot of different things like that happening that culminate into why people would pay more for a closet as an amenity set. Plus, again, the other thing too is, you know, and this doesn't come standard, but the drawer set can be installed in here. And now you're talking now a piece of furniture. A lot of these, like you said, a lot of these footprints are really small. So getting furniture into some of these places can be actually very difficult. And for some, they don't want to do it. And then you have also COVID, which threw another loop in here, which is shelter in place. A lot of people working from home, working from their residence. So again, those walls get kind of small. And so you want to feel good about where you're at. And so that's the reasons.
Yeah. All great points, Jim. And I was going to highlight a couple of those again. I think you're absolutely right. Success leaves clues, right? And so if, like you said, if you're looking at the bigger players in the space and what type of amenity, they're offering their residents, if it's working at that scale, then it tells you there's a demand, right?
Right.
As you mentioned, the industry being conditioned, I think you're absolutely correct in that. I mean, we all have the typical, granite countertops, certain appliance packages. Now we're seeing tech packages coming into the space. But you're right. How do you stand out and make yourself different? But you made a point here just a second ago I really want to highlight, and this is important. I think with COVID, we've seen more people being forced to be at home, which means they need to be more efficient in their home space, right? And as we talked about earlier, with there being such a limited space in some of these older vintage properties, and even newer,
even newer ones,
the newer ones, yeah. But how do you maximize that space and how do you be efficient? And although self-storage is definitely becoming more prevalent, I would argue that in some of these markets, the availability of storage is not quite as frequent. And then you're paying $50, $100 for a storage space and whatnot, versus, like you said, let's say workforce housing, a $9 to $18 rent bump. That seems a little bit more appealing to have it right there in the comfort of your own home. Like you said, you feel good about your space, but you're not having to go and rent another unit somewhere outside of your property. So all very, very important takeaways there that I think is something to definitely be mindful of.
Right. I think one of the things I'd like to share with your audience, and something that, when we originally approached this, we approached it that there's the rent increase and the NOI, and that was a really great narrative. But I'll tell you some of the bigger ones we've learned, and I wish I could take these on as my own ideas, but the larger client set, and they're very sophisticated in how they manage their money and so forth. A lot of times very complex. But one of the things we've learned is around accelerated depreciation. So a lot of these groups now are using it as a way to depreciate out very quickly. And again, I'm not a tax person, but I would tell you that if your audience is not familiar with that, they should definitely get familiar with that beyond just Clozzits. If you're an investor and you're trying to leverage the tax benefits of today for your own, your K1s and so forth, you should definitely look at that. And so some of our clients will use it as a way to put the product in, pay for it, and then depreciate out. Our product's, designed to live 15 years. And so they can depreciate, I think it's up to 10 years worth of the cost in the first year. And so it's a way to, really save tax dollars, paying out tax dollars. So very clever way of doing it.
I'll tell you what, Jim, kudos to you, man, for grabbing this low hanging fruit that probably everybody just, who would have thought, man? But you're absolutely right. All the benefits that come along with this. So again, man, you're speaking our language. This is exciting. Brian, does your closet space look like that behind Jim?
I know, but I'm pretty sure my wife would appreciate it if it did. I'm hearing everything you guys are talking about, and thinking exactly what Jim was saying earlier. It sounds really strange, but closets are a very attractive amenity to a lot of people. You could go on, this is just, friends, family, my wife and stuff. You can go on YouTube and watch celebrities showing off their closets. It's a thing.
Correct.
Right? I'm sure you're aware.
It is a thing.
It's a thing.
It is a thing.
People spend 30 minutes or an hour watching somebody else's closet, so this is just another version of that, sort of a bragging rights. And I think as our generation, we talk about how expensive it is getting to live, and how, the younger demographics are more likely to rent because of the home values going up and people getting priced out of certain markets. they're going to be looking
That's
for
right.
amenities like this. They're going to be looking for not only the tech packages and things that are starting to become sort of normal in the industry, but this is that next layer, that next iteration of amenity that are really differentiating your product, and it gives you a reason to stay too. If you're thinking about leaving and maybe you're looking at another complex or something like that, you're like, but I love my closet.
Yeah, well, I'll give you a couple good ones. So we talked about the depreciation piece, and you brought up a really good point here, Brian. We have clients today that are doing it as lease ups. They'll say, hey, instead of giving you the concession, which is just pure cash that's going out, we're going to give you an upgraded closet. And when they do that, because our product is designed to be on the turn. So this product you see behind me, it was put up in less than 2 hours by one person. So we actually either do the installations ourselves for our clients, or we teach their maintenance teams, GCs, whomever, to do the work, and we sell the product outright since we're the manufacturer. But they come in and they'll do it as a lease up program, and it's amazing how many people actually stay because of it. And it's a way to justify the rent increase. That's the real big reason. And so what you're doing is you're getting an amenity increase while improving the property for the next tenant that comes in. So the first tenant's really starting to pay off of that. So it's really clever what some of them are doing. In addition to that, some of them are doing, deferred profits. So what we're seeing is some of our clients will say, hey, because of the tax laws, we don't want to take a profit this year. We want to try to defer it to next year. So we're looking for a capital expenditure, something small, not too big. You guys fit right in that place for us to do that. So let's go ahead and do it this year so that we can pull down our profitability, not get hit with maybe taxes, or maybe they're trying to do something else. Looking at rolling it into a different program. So that's what some of our clients actually do, is do it for that purpose.
Jim, we talk about this all the time, but I want to go back and highlight, this is why I love working with people like yourself that have both experience as not only a provider or a service provider, but also as an investor and owner yourself, because you understand where the need is, right? You understand that value add and how to really leverage something that this is something so specific in the niche, and how we can implement that in our business strategy and appeal to both the residents and us on the operational side. This is really, really cool, man. So talk to us a little bit more about the actual installation itself. Are you guys limited by closet space capacity? What's your range and flexibility? Talk to us a little bit more about the actual product itself.
So very good question. Wish it was asked more. So the product was originally designed. It took us about a year of field testing and development of the product. This is our 5th generation product right now, and we're only 2 years old. The reason being is you run into all kinds of field challenges, everything from size to wonky layouts to, hey, we've got the utility box here, we have electrical panels here, and we have, cable over here. And so what we designed was a product that is a system, and the system is designed, if you can see, let me see if I can, right here, they're connection points, and we basically have different sizes of the product. So we fit it in as best we can into the space we have. And it's a floating system, which means that for your audience that is watching, I'm gonna flip down. It's off the floor about 13 to 14 inches. So it's semi-custom is what I like to call it. Our design team will come in, and what we'll do is we'll ask the client for the measurements, basically rough dimensions of the closet and where the door is located at. Maybe if there's windows, some do have windows. And what we'll do is then we'll design it out at no cost to them. That lets us know what the cost is going to be. And from there, we either give it as an install price, kind of full turnkey out the door, or we'll sell you the product and say, here's the product cost. You can do it yourself. We can show you how to do it. We have, like I said, videos and stuff. Because again, we do have companies that are self-performers. And we then ship the product, or our install team shows up with the product, and they do it based on the schedule. And typically the schedule is where those vacancies, if it's on the turns, or if it's a complete renovation, then we're going in whenever, flooring's put in or the walls have been painted, and we'll do it that way. I'll tell you something else, and we'll talk about the process. One of the things I want to mention before I forget, we do a lot of due diligence. So with acquisitions coming up right now, and it's heavy. I mean, we've done probably 65 walks just this year alone with clients. And the reason being is they're figuring us in. Well, the ones that start figuring out and really like the numbers, they start looking at acquisitions and saying, hey, we need this in on the ground floor. We're going to finance it in immediately. And we're going to get that 2 to 5%, 3 to 5% rent increase, but we're building it into our models. Just kind of a sidebar note there. But we install it and we're in and out.
I appreciate you mentioning that, Amanda, because that's actually what's going to be my question for you is when do we get you guys engaged? And obviously in the process of doing our walkthroughs and pro forma development and kind of looking at our budgets, the more information we can have up front, the better, right? And so I like the fact that you guys can come in and provide that service up front, so that way we can build it into our model. So,
Brian and Cody, one of the things I want to tell you guys that we learned from this was we had a lot of clients, and I know you guys have experienced this, where you get down the path, maybe you own a property a year, 18, 24 months, and you say, you know what, we ran across something like a tech package. We would really like to do that, but we don't have CapEx for it. That actually happened in some of my scenarios too. And, or we just didn't have the budget for it. We'd love to do it, but can't do it. We had a number of clients that came to us and said, we really like your product, but we don't have CapEx for it, or we're spending it on a roof, or we're having to do this stuff, but we're really trying to figure out how to get the rent increase. So something that we have just launched in the last about 3 weeks is 2 programs. We have a loan program that is, it's not supported by the property, meaning it's not, it's unsecured. It's an unsecured loan, because the reality is your primary lenders are not going to have another lien on that property. I know that. Most of us know that. So being unsecured, there's no lien activity on that. So the benefit is that we can do a loan, and the loan is set up at a interest rate of 3.8%. So we're not making money. We're not getting wealthy off the interest rate. Where we make our money is in the sell of the materials. I'm like General Motors. That's why I tell people we're like Ford. We just want to sell the product. So if we have to finance, we do. And we do that over a 4 to 5 year period. Or if people are not comfortable with that, we have a lease program with a dollar buyout at the end of the program. And the reason being is some people like leases and they want it affecting their balance sheets and so forth in a different way. So we're financing it now. So the benefit is that for $20 to $25 a month, if you're getting that rent bump of 30 to 35, you're cash flowing immediately on it. And that's something we just launched because we have a lot of clients that say we'd love to do it. We just don't have the CapEx to do the big play. And so now we're signing up ones to do either the lease or the loan program.
It's a great idea.
Yeah, Jim, I got to tell you, we can have a whole nother episode about building a business, because this is very, very clever. And what you're doing is you're solving all the problems, right? So, aside from the niche itself and the product itself, it's like, as a business owner, you're going out there and saying, what are the challenges that we're going to run into and how do we solve them right out the gate? That way it gives everybody that opportunity to make decisions quickly and move fast. And I mean, kudos, man. That's very brilliant on your behalf.
Thank you. That's what I do, sitting up at night, drinking scotch. I look at the world. No, that's not what happens. I have a great team behind me that say, hey, how do we grease the skids more? All these people it actually got very frustrating with me. I would tell the team internally, I go, don't tell me about another BS moment where the client said they love the product, but don't have the money. I don't want to hear it anymore. So literally my VP of Ops came in and said, well, what if we finance them? And he goes, that's what General Motors, that's what Ford does. That's what Nebraska Furniture Mart does. Rooms to go. I'm like, yeah, okay. I gotta get some capital together. Okay, we'll do that. So
freaking brilliant,
that's
man.
what we're doing.
It's smart. Very, very, very smart. So I love it. I love it. Well, all right. So let's go back to the product type then. So we talked about maybe, you have some flexibility, semi-custom.
Yeah.
What's the vision for the product? Is there any, with this talking about just closet space, is there any other product lines coming down that you can maybe piggyback off this, or,
It's a great question. So we have clients, I'm gonna grab something here. We have clients that will come in and say, look, stylistically, we like your product, but we're doing an industrial look. We're doing something like that. So I would say that in the future, we're looking at other designs of the closet. As far as like maybe a wire type system or something of that nature. The thing that most people are familiar with is this guy. I mean, most of us are familiar with this product. It doesn't support rent increases. That's what I do know. So that's one of our cautions. But what we do have is we do have clients that have certain requests, and that might be, can you do different colors? Can you do, and we actually can. We can do different colors. White's the common. If the volumes are high enough, we've done bamboo and a couple other different versions. So there are different ways of doing that. But yeah, the reality is that you could do additional add-ons. Right now, our focus, because the market's so big, we're just really focused heavily on this and executing well with excellence on this. But as the product gets more mature, absolutely, you can look at different amenity sets. I mean, we've talked about doing kitchen doors. Since we're a manufacturer, why not do kitchen doors? We have a lot of clients that will go in and do painting and so forth of those. But what if we had our team in there doing the install of a closet? They can install kitchen doors. We could manufacture those doors, door facings.
Interesting. I like that. Good to have a vision down the road, and see where we go.
Correct.
Obviously, hopefully you're the only one dominating this market, and you stick to it, and you do all the hundreds of thousands of units that are out there for people. But talk to us a little bit about, I guess, is there a size capacity in which you guys would prefer to work in? Is there a minimum threshold that you say, hey, look, it's not worth us coming in and implementing these packages?
Great question.
Like a 50 unit or 100 unit property?
So for us, it typically goes down to, what the client's wanting, in the sense that typically I would say the average client, if they're doing the turns, if it's a 200 to 300 unit apartment complex, they're usually doing about 12 to 15 of them a month, typically. We do have clients that have 50 units. We have one that's a 40 unit. Now they have a big portfolio, but they have 40 units. And we'll go in and we'll do 5 a month. So 5 to 7 is about what I would say is a good starting point. Usually we're asking our clients to beta test typically 2 to 3 units at least, seeing if they're getting their rent increases. They typically test. It's very interesting. Some will test depending on the market. Like I'm in Dallas here, but just like Houston, major metro, you can support a higher rent increase in maybe a Katy versus you can in another market segment. So we do have clients that are sophisticated and will go, hey, same closet, even same floor plan, but they're across town and they're in a better zip code, and we can get a $5 more premium or $10 more of a premium. They'll do it. And I get it. And so they'll test and see what they can support. And then they just start turning it on after that, once they get comfortable. We do occupied as well. So we do have clients that will say, look, we're willing to do occupied, and we don't mind that either. We've got the credentials and the right insurances and so forth to do that. It's just a matter of logistics and working with the resident at that time.
Gotcha. And Jim, from the time that we say we execute this and we say, okay, we're gonna install all of your packages into our community, from the time that the product's delivered, what's that time gap? I know you said you're the manufacturer yourself, so I'd imagine that you can mobilize pretty quickly and get this product on site after a purchase order.
Yep. Typically, for our clients, once we get kind of revved up with them, because, I hate to say it, the industry kills me, in the sense that it's like, hey, we bought this property yesterday. Can you guys start tomorrow? And you're like, how long have you been working on the due diligence? Well, whoa. And they'll say, well, we've been working on it for months. And you're like, okay. So now we're in Phoenix, so that's literally how that happened. So what happens is typically the mobilization on this is usually within about a week. Once we have the designs, once we know that you're looking to move forward, it's just about moving material in place, getting our schedulers to get the installers on, and putting guys in the rotation, because literally that's the way it is. We have teams that just go out and they go to apartment after apartment, just installing in different complexes every day.
Nice. And I want to go back to real quick, and I'm sorry I'm bouncing around a little bit, but questions are rolling in now the further we go down the roll here. At the point that we do a walkthrough with you and we say, okay, Jim, we're going to execute this across this many units. When you provide that analysis back to us to say, okay, here's your anticipated CapEx cost and here's your potential ROI, what does that look like? Can you tell us the feedback that you give back to us again?
So what we're looking, I guess, I think that's where you're leading on, is the calculator. So the calculator basically looks at what the investment is. So basically we're looking at how many units and what that average investment is going to be per unit set. And then what we're looking at is what are the rent increases? We usually do increments. We'll say, look, we'll give you some rough numbers, 20, 25, 30. We'll do it in increments. Now we can change that. That's all dynamic. So we can, Excel spreadsheets. So we can say, let's $28. We can get very specific on that. What it then does is we ask, what's the exit cap rate that you're looking for? Because typically that's what's most important for you, not necessarily the one today. And so then what it will calculate out is based on the rent increases and the time. And so one of the factors we'll look at is usually 48 months is what most of our clients want to see results in, typically. And it'll literally calculate out what's the ROI. From the ROI, what are we looking at as it relates to NOI, and what's it doing to the overall asset value of the property set if you had all these done and they're all performing at the level you want. So again, it's assumptions, but we try to stay very conservative on those assumptions. And then we say, look, based on the investment and you're able to do these things and support the rent increases, here's what that does to the property value.
And remind us again, Jim, I know you mentioned you're in 17 different markets. How many units would you say that you guys have your packages in? Do you have that number off the top of your head?
North of 50,000.
50,000. So proof of concept is there as far as being able to provide that tangible assessment.
Thank you. Next year, literally, we plan on next year we're cranking up to north of 5,000 to 6,000 units a month. Literally next year. Wow. And so we're rolling. That's all I'll say. Awesome. We're rolling. So when you said a couple 100,000, our goal literally is in the next 5 years to be doing well over 1,000 units a year. Well over 100,000 units a year.
That's awesome, man. That's great. Brian, I never thought I was going to be so excited about talking about closet spaces, man.
No, neither did I. And I see this as it's going to always be in the back of my head now. Anytime we're underwriting a property and looking at a value add deal, it's just one of those things you think about. Everybody talks about parking spaces, covered parking, reserved parking, tech packages, lockers, and now,
of course, I get it all. What's funny is, I'll tell you this, what's been very funny is going through the due diligence process with so many different asset groups and so forth, walking properties, and they literally walk into the closet after they see our demo or they look at this, and you see them looking at, I hate to say, they're either looking at something like this, or they're looking at some sort of like particle MDF product. This is a particle MDF product here. And they're looking at it and you just see them and they walk out and they go, yeah, we need to change that. That's going to have to change. And it's like a light bulb. And I laugh and I'll just say, well, again, it depends on what you're trying to achieve. If you tell us no, we understand it's about business. I mean, it's about the bottom line. And I will tell you that one of the interesting things that we looked at, we hedged on very early, so we're international. So our manufacturing's international. We literally, our product's a 3/4 inch plywood product, and we source out of different countries because we recognize that the wood cost here, we're going to be so crazy the next couple of years, and they are ridiculous. If I need to complain about something, it's the cost of lumber these days. And so
it's killing a lot of CapEx plans across the board.
Correct. And so we've had a lot of clients ask us, how are you able to do that? I said, we source internationally and source up in the Northwest or into Canada right now. It's not cost effective. And we recognize that. And so we're able to keep our pricings. It really hasn't changed since we started. So our average client, by the way, average closet is $750 installed. That is our average. You can run those numbers real quick. The numbers all I gave you, you can back into this real quick. I know you probably are over there.
I was already thinking about it. Yep.
We love numbers, Jim. So this is great. But no, it's what's great about it. You're right. It's just such a low cost of installation, low cost when you look at it from an overall CapEx perspective compared to other amenities. And to yield that type of ROI on such a small investment is really, really powerful. So, again, just a big kudos, man. This is a great little niche here. And I say little loosely. You guys are doing some phenomenal business, but this is really cool, man. If I wouldn't have met you a month ago, this would have never crossed my mind to look at this as an opportunity.
Trust me, when I got invited down to the MFIN, I was invited down there by Kelly Stinson. I was like, I just don't know if we're ready for syndicators. It's such a conditioned market. And she goes, no, there's some of the ones that are more often willing to take a risk. And she goes, but you're not even risking it. The reality is you've got big institutions that are doing this, and that speaks volumes to the whole industry. And you should be talking to them. And really, the syndicators are where we want to be, because ultimately you guys control more of the market than even the large institutions do when you consider all the doors and everything. For us, the challenge was the onesie twosies weren't going to make it happen. To get scale and economies of scale, we had to have large volume up front. And that's what we did. And now we're going to the middle market, as we call it, and working that, because that's such a large market.
Yeah.
That's a dominant market. And that's part of the reason why we created the program on the lease and the loan, was because we recognized that there would be more opportunity there versus the REITs. The REITs have a lot of that money and they can do it, and they're looking for smaller returns. But your mid-market may say, hey, we would love the product, we just don't have the cash for it. And so we're trying to create that value add to be able to allow them the opportunity to purchase the product.
Yeah. No, I think it was an excellent business strategy, very, very smart to kind of start with that scale and then now target, us in that middle market. And again, this is a challenge right now in today's marketplace, is where do you allocate the right CapEx to generate that ROI? Because I feel like, again, if you're looking at a property that's been turned over and had all these different amenities placed in, where's the value at? I mean, it's getting harder and harder to find that where you can really implement something that really does create an increased revenue. So that's why this is really, really exciting. And I'm happy to get this out. And I hope other sponsors and operators tune into this one, because I think they're going to need to look at this and consider this as an option for sure.
Absolutely.
So.
Well, and I'm curious now from your guys' end, because I love real estate. What are you guys seeing in the marketplace? If I might turn this around for just a brief moment, what are you guys seeing in the marketplace? Because I can talk about what I see, but I'm curious what you guys are seeing on the ground, because you guys are in it every day. I mean, I am in a different way.
Yeah. Well, I think you highlighted it earlier, where people are looking for a more suitable, enjoyable living space, right? Because we're spending more time at home. People are working from home now because of COVID, or they're, maybe some people are still hesitant to kind of get out in the general public in the wake of this pandemic. So I think a lot of people are spending more time at home, which means that they want to maximize the spaces that they have. So, right. So they want those either more efficient amenities or something that just gives them a more comfort, so to speak. Right. And in markets like ours, Brian, Houston, we're looking at a lot of 70s, 80s vintage product, older footprints that are very limited in space. They don't have opportunities, as like I said, with maybe storage and such like that. So I think this is a very high demand niche, even though some people may not know it yet.
Very true. Very true.
Yeah.
Very interesting.
Yeah. So, well, Jim, anything that you think of that we didn't cover? I know we kind of bounced around a few things here and we've discussed a lot here in a short period of time. Anything that we didn't cover you think that's important?
I think, for one, I think the conditioning and keeping an open mind to it, because I know there's a lot of naysayers out there. They go, the closet really. And the reality is I would have said 3-4 years ago, even no, there's nothing there, but today there is. But I think the only other thing is that it's not always a clear-cut strategy of how to make money. Like I said, if you're gaining that rent increase and you're able to do the depreciation, that's a major win. And we've got that in place for at least the next couple of years. So I think that's really a great option for a lot of clients. And if they're not using it they should be using it leveraging it for other things as well. And then outside of that, what we see is just the market heating up. So I know it's a challenge right now, like you said, to get the returns, even just because of how hot the markets are. And so, it's about trying to be clever. And so we really do have conversations with our clients about, well, how can we be clever with this? Or can we come in with less of one piece of the product that might be really expensive and get in with a low cost product, like, the single hangs here that you see behind me versus double hangs, just to give it a little bit of a refresh in that area and everything. So there are different ways of doing that. And we just try to work with our clients on this because like I tell our team all the time, look, we could be selling doorknobs. If we can figure out a way to make money off of that, then great. Because the reality is it comes down to the fundamentals that a client's looking for. And they're looking for, how can I get a return on my investment? How quickly, and so on. So outside of that, I think, Cody, we've covered off on a lot of that, stuff that maybe others haven't thought of.
Yeah, cool. Again, I encourage anybody that may be listening to this, if they get a chance, go back and check out the video here. I would really love people to see that visual behind you there, Jim. I mean, it's just a beautiful, beautiful product you have there. And I think for us as owner operators, our goal is to give our residents a welcoming community that they're proud to live in. And I think when you walk in, and even though it sounds kind of silly, but when you walk into a closet and you see a beautiful product of what you have behind you, it just gives a very good sense of a home feeling and just really a sense of pride there. So I think this is a great value add opportunity for people. I mean, look, you offer a free due diligence analysis when you walk through. You can give a great analysis on just the exact ROI versus your capital costs. I mean, you'd be crazy not to consider, and by the way, you solve the issue of the financing piece if you need it. So,
yeah,
I mean, what do you have to lose, man? Get a hold of Jim, get him on your property. Let's take a look at this and see if you can maximize this, man. This is great. So, well, Jim, unfortunately, we've held you up for long. I'll be honest, I didn't think we were going to be able to talk about Clozzits for 45 minutes, but you knocked it out of the park, man. Great job.
Thank you.
Yeah.
The only thing I would say is if they want to get in touch with me, people want to get in touch with me, they can do so on LinkedIn. I'm big on LinkedIn. So there, or Jay, and that's Jay Monk, M-O-N-K, at Clozzits, Clozzits.com.
Perfect, man. We'll make sure that's in the show notes, and we'll definitely make sure to spread this message with our fellow operators. And I'm excited to have you come and take a look at some of our future assets as well. And man, this is going to be a great product. So
absolutely. Thank you.
Awesome, man. Well, Jim, appreciate your time, man. Thanks so much for tuning in with us today.
You guys have a great week, rest of the week.
You too, buddy.